meeting has ended in Tata Steel. Let's go across to our colleague Kritika Saxena. Kritika.
Ronojoy, this is a shock. You know, we were expecting several various different versions of what could happen, but we are getting news from agencies that Tata Steel has cancelled the sale of its UK assets. This is a shock out and out. You know, we were expecting no major announcement to come in today. We were expecting Tata Steel to mull over the sale of its UK assets. We were expecting to buy some time, but it looks like, you know, the reports and what unions had been telling us about Tata Steel actually looking at retaining their assets has gone through, and Tata Steel has cancelled the sale of its biggest UK steel assets. I believe the release was supposed to be on the exchanges. We don't have the exact release yet, but this is what agencies have put out. Now, Tata Steel will thereby look at cutting costs by about £100 million as things stand. Remember, the Tata Steel's UK operations were running under losses of almost £1 million per day. So the fact that they're looking at cutting costs by about £100 million is important, but it's very important to understand exactly why they have cancelled the sale. Now, the couple of aspects that could be assessed over here. One, the fact that post-Brexit, buyers may not have had the confidence that Tata Steel is actually going to go ahead, or rather may not have had the confidence on how exactly the pension scheme will work out. And perhaps, you know, players like Liberty House and Excalibur Steel have perhaps pulled out. I'm still waiting for the release. For some reason, it's not showing on BSE, but we have Prakash Diwan with us. Prakash, you know, we were expecting some kind of a hold on the assets. We were expecting Tata Steel to perhaps look at selling some assets and retain Port Talbot. But by the looks of it, and from what agencies have put out, Tata Steel has cancelled the sale. How do you expect the markets to react? Because the fact is that they are sitting on a huge, I mean, the loss is about £1 million per day.
No, I agree, Kritika. It's distinctly a sudden U-turn of sorts from the very strong momentum that this asset sale had gained in the last few months. But I guess post the Brexit outcome, it seems the kind of uncertainty that the company stares at in terms of the future of the UK and the European Union itself means that things could be evaluated very differently, and possibly they don't have commitments from the suitors or the buyers, potential buyers, for the kind of price they were looking at. And remember one thing, this was an asset sale. It didn't actually remedy the situation at all. There was a big assumption that the pension liability would be supported by the UK government. But it still didn't mean that they would start becoming profitable or getting the money, and they would continue to lose money. It's just that somebody else would have to take on that burden. So in a way, it was not the best of deals in any case, and it kind of probably just doesn't make sense to do things with this kind of uncertainty prevalent in the market.
But, you know, the fact of the matter is that Tata Steel is still undergoing losses. What do you think could be the reason for them cancelling the sale altogether? Do you think it's a case of the fact that, okay, they will cut down the losses to an extent, or is it a case of buyers actually backing out?
No, it would be, so it's more of cause and effect. The buyers would have definitely backed out or taken time to, or gone back to the drawing board of sorts to reevaluate the proposition. And the effect has been that Tata Steel would have to now look at managing whatever cost control they can, and even, let's say, if they were not to lose 300 billion plus a year, they could probably, manage with 1/3 of that. So whatever saving is possible, they would start looking at that. B, they would also start possibly hiving off some of the assets that are there, break the whole thing down into, pieces and then sell the whole thing rather than, look at the entire business as a whole. Because now things could be very different. The compulsion to run the other businesses in Europe, the smaller ones apart from the UK piece, will probably not be as strong. So they might be slightly lucky with that, and they could get away by, actually exiting from some of the other markets. So that could probably become priority and not the UK thing at this point.
Okay, the release is out, Prakash, so I'll just request you to stay in and we'll try to get the Tata Steel unions as well, because, you know, unions were very impatient about the fact that Tata Steel hadn't completed the sale despite giving them several assurances that they will. So we'll get in touch with the unions, but let me take you through the release point by point. Now, it starts by saying that Tata Steel announced it would explore strategic alternatives for its UK business, including potential sale of the entire business, whole or in parts. The company and its advisors then contacted around 200 potential financial and industrial investors around the world to explore their interest in the business. The company has also deeply engaged with the governments of UK and Wales at every stage of the process. On the 7th of May, 7 expressions of interest were taken forward. The 7 companies were given access to extensive business information and management team presentations in order for them to progress their interest and thereby submit refined bids. Bidders were engaged in detailed discussion. The bids received have been carefully considered in detail on the basis of the commercial value and prospects of future sustainability. Now, the bids that have been reviewed have been done so in the light of uncertainties caused by the UK referendum and the outcome of the UK government's consultation on the British Steel pension scheme. This is exactly what we had been talking about, the pension liability, which was expected to be about £1 billion plus for the last 1 year. Taking the above issues into account, the board of Tata Steel has decided to also look at alternative and more sustainable portfolio solutions for the European businesses. Consequently, Tata Steel has now entered into discussions with strategic players in the steel industries, including ThyssenKrupp AG. Discussions have been initiated to explore the feasibility of strategic collaboration through a potential joint venture. However, the talks are at a preliminary stage and there can be no certainty of a transaction. So quickly, Prakash, while I go through the fine print as well, net, they have decided to shelve the sale, yes, but now they are now pursuing the possibility of a joint venture with ThyssenKrupp, and this is something that we had reported earlier as well in the overall European business. So look at a joint venture and not a sale. How do you expect the market to read into this?
So I think the market would probably not react to it, of course, positively immediately. But we would have to wait to see what alternative plans the company has on its mind, and what is it that it can do, and what kind of timelines it would follow for any kind of a strategic joint venture effort. My sense is the market is not going to read very positively into this, because this is one of the key triggers where the stock got re-rated.
Prakash, just hang in there for a second. We also have Harish Patel, the spokesperson of the Workers' Union in United Kingdom. Harish, thanks for joining in. You would have perhaps already gotten the information, but let me reiterate, Tata Steel has said that they have cancelled the sale of their UK business. What's your initial reaction? How do you expect the employees and the various unions that had been pitching for Tata Steel to go through with a successful buyer to sell their entire assets in a smooth manner? How do you expect employees to react?
Our position is clearly that as a result of our referendum vote regarding leaving Europe has thrown a spanner in the works as far as the sales process was concerned, and we recognise that. We also appreciate what Tata Steel board has come up with this evening in terms of looking at other strategic moves, and we'll obviously be working hard to ensure that there are certain guarantees we will be seeking in terms of the production in the UK. As far as the tie-up is concerned, we will also want reassurance from Tata to make sure that they don't cherry-pick the products with whoever they tie up with in this consortium. Having said that, it is clear that there is overcapacity of steel, and the steel demand is not going to increase substantially over the coming years. But what we are looking for is to make sure that there is a steel industry in the UK, and if Tata wants to stay in the UK, of course we will work with them very closely and make sure we arrive at a constructive position in terms of the future sustainability of the steel industry in the UK.
So, you're saying that as of now, employees would be okay to look at various potential aspects on what can be done of the business, or wouldn't there be some kind of uncertainty in the minds of employees, given the fact that they were expecting a new buyer to actually come in?
Well, in terms of the new buyer, prior to the Brexit vote, it was clear that we were feeling comfortable that there may be somebody out there with a bigger conglomerate to support the industry. As a result of the Brexit vote, it changes the outlook on the basis that even if there was a management buyout for the industry, what we would have ended up is it was going to be a short-term success in terms of potentially 2 or 3 years' time would be in the same position. And clearly, if Tata is looking at building partnership, then obviously we will be making sure that certain guarantees are given to us in terms of the production and the making of steel in the UK is there. And then we'll be looking at it very carefully and working very hard to make sure that we arrive at a positive future for the steel industry in the UK.
Harish, when you have a conversation on behalf of Unite with Tata Steel, would you pitch for Tata Steel to look at a sale process at a later date, or would you say that at this point in time, Tata Steel has the bandwidth to be able to take the UK business to greater heights and to handle the entire employee transition that is very necessary?
Well, as far as we are concerned, obviously in terms of when Tata bought the business from Chorus, it had to face it. We're going through a turbulent period, and clearly, what hasn't helped is the government regulations in terms of the Chinese dumping of steel, which the United States took steps. And obviously, what that has done is brought the capacity turned around and dumped into Europe, particularly in the UK, which hasn't helped in terms of Tata Steel's ability to compete, particularly given the high energy costs in which we've been lobbying government. So what we're saying is that, that we are cautiously welcoming Tata's statements today, because clearly it gives us an element of breathing space to look at alternatives together. And of course, we will be looking for guarantees for particularly making sure that the steel-making facility in Port Talbot is sustained in one shape or another. And of course, they will also announce the sale of the specialty products, which we recognize that it didn't fit into the strips portfolio.
Okay.
So there were other interested parties who have expressed an interest in that. And all we will be saying to Tata is that we want to make sure that they sell it to the right buyer who is committed to the business in the UK. And that's the process we'll be looking like what we've done with Long Products.
But Harish, now that it looks like the rest of the businesses of Tata Steel is most likely to be retained, what is the next step? What is the conversation that you will have with the UK Business Secretary? How can the UK government now take this forward to ensure that the problems that were already ensuing within Tata Steel's European operations do not repeat?
So we will be seeking, for example, we will make sure that the issues which we have been campaigning for, the 5 asks in terms of making sure that procurement facilities are open and transparent and competitive, particularly for public infrastructure, where there should be more inbuilt in terms of taking account of the issues which affect the community in the UK in terms of jobs and the social impact. The second point we're looking at is to make sure that it delivers on the energy costs. And he has got to work very hard with the unions and, with industry to make sure that we bring it to a level playing field. The other point is, in terms of the business rates, what we can't afford to see is that there is a situation in the UK where if any investment is put into a site, the business rates go up. That makes a nonsense of particular companies trying to invest in the UK. When they want to invest in new machinery and new technology, they're being penalized by higher business rates. So those are the factors we're looking at closely and making sure that whoever, even including the Secretary of State and the government, sit down with the unions and the interested parties to make sure that they deliver in some of the issues which are affecting the uncompetitive nature of we've found ourselves in the UK.
Okay, so let me also bring your comment in, Harish, as far as the strategic sale of the specialty business is concerned, which is specifically in context to the prospective joint venture with another European player. How do you expect the unions to react to that? Given the fact that the earlier or the current UK business sale hasn't gone through, how confident are you that these talks will actually go through?
I think what we've got to look at is examine very carefully in terms of what it means. So we are saying that it's a cautious welcome from Unite particularly, that we've worked with Tata Steel previously in the automotive trade. If you look at the success we've made out of Jaguar Land Rover, and that in itself is a successful. So we're a multi-industrial union in the UK, and we're the largest. We know how to deal with this stuff in terms of our negotiations. And obviously, pressure on government and making sure that it provides a level playing field and assists in research and development, which is another thing which we believe the government needs to step up in terms of particularly manufacturing instead of relying on servicing industry. Of course, in terms of our counterparts in Europe, they may be nervous in terms of, looking at joint ventures and stuff like that. But they also need to understand that it's a global situation we're looking at. This is not just affecting Europe, but it's worldwide. And how do we make sure that at least there is a level playing field in which we compete? For example, the application for the Chinese market economy status. Yeah, we are opposed to it because we do not believe that China, can demand for a market economic status when it's not an economic situation, because it's subsidizing most of its products, and hence it's putting us in a very uncompetitive situation. Yeah, we're already experiencing that not only in steel, but in tires, ceramic, textiles. So, we will be working with like-minded businesses in terms of ensuring that jobs are secure and manufacturing, particularly in the UK, is sustained.
Okay. Harish, a quick word as far as what the UK government can put in terms of pension help, in terms of aiding pension liability and coming up with a new pension scheme. What are your demands with respect to the new pension scheme?
Well, what we are saying is that, look, if we can avoid the British Steel pension scheme going into the PPF, the Pension Protection Fund, which is a national protection fund, that is our primary aim as far as the unions are concerned. We need to examine all sorts of alternatives, including, I must say, that as far as we're concerned from Unite point of view, is when British Steel was privatised, there was a £4 million liability, which was transferred into the pension scheme. What we're saying to the government is that they need to shoulder that burden as well by putting some form of help towards making sure that the British Steel pension scheme is sustainable.
Okay, just to clarify, there hasn't been any out-and-out, statement from the Tata Steel press release saying that they have cancelled the sale of their UK business. However, they are saying that they are exploring and reviewing all the possibilities. They're talking more about the joint venture with ThyssenKrupp and the fact that they have entered into initial discussions and how that they are exploring all strategic options to be able to go through with this deal as a whole. Harish, before I let you go, one last quick comment with respect to what are the immediate issues after Brexit referendum that have to be ironed out between Tata Steel management, the current union, and any possible deal that they may sign right now?
Well, what we've got, there are issues which are outside of the control of Tata Steel and the unions locally, because these are political decisions which we've made. Even the politicians at the moment in the UK, you probably gather that, they're all over the place because they just do not know what to do. They didn't have plan B in terms of what it means. What does the new business trade arrangements mean in terms of Europe? What's the freedom of movement? We clearly heard that there is differing opinions between the politicians in Europe, in mainland Europe, and the UK government. Having said that, we are where we are. What we are saying positively is that what we want to do is our primary responsibility as a trade union is to make sure that we secure the jobs and the industry in the UK as best as we can. And if Tata is willing to look at other partnerships within to make sure that it stays into the UK, I believe that we'll cautiously welcome that, and we'll work together, whoever it is, to make sure that the future of manufacturing in the UK, particularly steel and making of steel, has got a confident future moving forward in the new chapter we're moving as far as the United Kingdom is concerned. Whether it's going to be outside of Europe, which clearly it is, the question is when. But we can't sit back and wait for those eventualities. What we're doing is planning forward and thinking ahead in making sure that we examine all options and don't rule them in or out.
Harish, also let me just bring in your view. Is it possible that with the devaluation of the pound, Tata Steel has perhaps sees that there is maybe more sense in retaining the UK business as a whole? Specifically?
No, I don't think. I mean, what has happened clearly is that since the announcement, we know that the steel prices have improved slightly, and clearly we haven't had access to any of the bidders in terms of what their plans were. But certainly, what is clear is that the Brexit vote, which the result of the Brexit vote, we campaigned to stay in Europe as a union, and we're campaigning very hard. We lost, and we've got the result. that obviously throws a totally different spanner in the works, because we believe that in terms of the capacity, of the overcapacity of steel particularly, it brings us into a different chapter. And what we are saying at this moment in time is that we did not want Tata Steel to make a rush decision given the Brexit vote. Yeah, because at that time there was a positive situation. We didn't have this uncertainty about Europe, and clearly the vote brought in a different chapter for us to deal with. And what we're saying is that as a result of that vote, clearly what that brought about was that the UK steel industry, without a big parent group internationally, would have difficulty in terms of surviving on its own, given the uncertainty whether, what the negotiations with Europe is going to bring. And even at this moment in time, that the UK government is still pondering whether to get into negotiations and say, yes, we will get out of Europe. Nobody is saying anything. Nobody is rushing into those decisions. And what we can't have is a 2-year period of uncertainty, as clearly the industry needs to get on and make sure that it puts a foundation for the future, irrespective of whether we are in Europe or not. But more importantly, what certainly it needs in terms of the steel industry is that it needs to have an international organization, a conglomerate behind it, to make sure that there is support for investment and the security of Port Talbot and the making of steel in the UK. If that isn't in place, then I'm afraid that the way we see it, certainly from our point in terms of Unite, the union, is that it makes it very difficult for any small organization to survive the competitive forces out there internationally and globally, because it will need a lot of investment.
Okay, Harish, just a quick comment. Port Talbot had about 4,000 employees, if I'm correct. So again, for the viewers that are just tuning in, the entire sale of the UK business has been called off by Tata Steel, and now Tata Steel will be selling, or rather doing a separate sale process for its South Yorkshire-based specialty steels business and the hot pool pipe mills within the UK. Harish, how many employees are within these two units specifically, and what are the separate negotiations that will be required now?
Well, there are 2,000 employees affected by that, approximately 2,000 in the specialty and the Hartlepool pipes works. Okay. What we will be seeking is that Tata be a responsible seller, like what we've done when we were when Tata was looking to sell off its long products. We were involved in terms of meeting some of the bidders, and also not only that, what we had was an opportunity for our independent assessors to go through the bids to make sure that there was a proper business plan and the investment plan were very carefully examined by somebody independent in a confidential manner. And they gave us advice that this was the best deal, as far as they saw it. It also gave us an opportunity to meet the bidder as unions, to make sure that they made us feel comfortable that their business plan and their commitment to the business is there, and we will be asking the same sort of facility and the process as far as the specialty and the Hartlepool pipe sites are concerned.
Okay, let me also bring in Sanjay Suri. Sanjay, you've been tracking this for a while. So we have the answers now. The entire UK business will not be sold. They will be retaining majority of the UK business. However, they will sell their Hartlepool pipe business in the UK and the specialty steels business in the UK. And as Hitesh was just pointing out, that has about 2,000 employees. Sanjay, how are you expecting the reaction to that? And, are these the same mills which Liberty House was bidding for and Excalibur Steel was bidding for?
Well, when the sale process was opened, it was announced that this would be for the entire Tata Steel facilities. Yeah. There was some discussion whether the company should be broken down, whether facilities and plants should be separated one from the other and sold selectively. There was an assurance from Tata that there would be a collective sale, and there was a demand that it should be a collective deal. We now have a different situation. How far the workers are happy to accept this will depend upon the precise terms that work out both at Port Talbot and at the other centres. There are clearly negotiations underway already for sale of the facilities that sell and manufacture processed steel. And the new deal will have to be worked out between the new buyer and the unions and the workers. But clearly, on the main facilities at Port Talbot, there has been a great deal of effort from the British government. We've seen the minister now coming down 3 times to discuss this in Mumbai. It's not every day that a British minister flies 3 times to prevent the sale of some assets in the UK. So far as I know, this is unprecedented. But clearly, he has not gone there just to talk persuasively, but to make very specific offers. We have seen some of those can offer for a 25% stake, better loans on easier terms on the pension funds. Now with Brexit, there are other possibilities where the UK can act potentially unilaterally without the EU. So all sorts of promises have been held out, and all this combined with higher steel prices have certainly persuaded Tata to put the process on hold, and it had been thinking that way for a while.
Sanjay, you have had a word with Liberty House as well. You've been talking to your sources within Excalibur Steel, within unions. Is it possible that Liberty House is the player? Because there have been active talks in the last 1 week alone that Liberty House is the only bidder that is left. Is it possible that Liberty House would now look at these 2 specialized units? Or is it something that is Port Talbot very categorically something that Liberty House was looking at?
Liberty House, so far as I can tell, and this follows an extensive conversation with Sanjeev Gupta, that they were not interested in buying offshoots. They were not looking for the smaller fraction of the whole. They have bought some plants recently in Scotland, and that is an announcement, of course, they made with some degree of pride, but all the while, that is not what they were looking for. They're not looking for the small stuff. They're looking for the big operations for the whole of the Tata Steel sale. They were looking at buying the whole plant, the whole company rather. So they are not likely to be looking for their relative crumbs now.
Okay, in fact, we also have Prakash Diwan on the line with us. Prakash, thank you so much for holding on for such a long while. So the clarity has come in now. It's not they haven't cancelled the entire UK business sale. They have, however, cancelled the sale of Port Talbot and the remaining UK operations, barring 2 specific plants. This is in Hartlepool and in Hartlepool and their South Yorkshire-based specialty steel business, in a sense that has about 2,000 employees. So it's obvious, Sanjay, that it's obvious. Prakash, that there won't be any major amount coming in terms of capital. But do you believe that these 2 plants still being on the block would at least mean some kind of loss cutting for Tata Steel?
Well, I think cutting down on losses is not much of a choice. It's going to be inevitable because that at least helps cut down on the burn, the cash burn that the company has been grappling with. And remember one thing, Kritika, you have a business which has already seen which would see a huge write-off from the kind of cost that Tata Steel had incurred while buying out Chorus. And all these assets, had they been sold out en masse, out together to some investor or to buyer, they would have resulted into a big write-off, which is now going to get probably avoided. What seems like happening is there's a huge possibility that a JV with maybe ThyssenKrupp or somebody else could make more sense to revive some of the specialty steel businesses, given the firmness in commodities from the time the talks actually started 4 months back. So there could be a little bit of a disappointment, right by the street in this so-called call-off. But I would believe it would be a large positive in the medium term for Tata Steel to re-look at options which could be more profitable than just a simple sale of assets and a write-off. So that's going to definitely be a big positive. But of course, there's enough of a gap between the cup and the lip. There could be so many ifs and buts between today and the JV actually getting announced. So we'll have to wait for that. But I think it's mildly positive in the near term, though there could be some disappointment tomorrow on Monday on the stock.
Okay, so I'm going to quickly break up the bits that we need to focus on. One is the fact that Tata Steel will not be going ahead with the sale of its entire UK business unit, specifically Port Talbot, which is the largest operation with about 4,000 employees. In all, Tata Steel UK has about 11,000 employees. What they will do is sell 2 of their UK plants in Hartlepool Pipe and the South Yorkshire-based Specialty Steels plant. In context to that, they have said that they've already received interest from several bidders for the Specialty Steels as well as the pipe mills plant, and a formal process for this will be commencing soon. Over and above that, Tata Steel will also sign a joint venture, or rather they're in conversation to sign a joint venture with ThyssenKrupp for their European operations as a whole. So the entire European business will be merged, or rather is in conversation for the possibility of being merged into a joint venture with ThyssenKrupp. So to an extent that will bring down the kind of losses that they had been seeing as a whole. And over and above that, they will retain Port Talbot, Rotherham as well as Stocksbridge, which are the remaining plants that they have in UK, and sell 2 specific plants. Not much of capital coming in immediately, but this will bring in some kind of reduction in the cash burn that they were saying. So Prakash, what will be the key things to watch out for? The fact that there has been a devaluation in pound, the fact that there has been some signs of demand revival. Do you believe that that will augur well for Tata Steel in the near term?
You know, it does kind of start making things look less uglier from a capacity utilization and a realization perspective. But not that, you know, it is really going to turn things into a profitable side. We'll have to, of course, look at what kind of a JV eventually gets announced, and that could bring a lot of value, that could bring a lot of synergies in terms of costs and hence assure the business of a market as well. So I would believe you'll have to wait for those contours, and those will be very critical for re-evaluating the stock and the company's business at this point in time, rather than just steel prices. So, and I'm quite positive that there seems to be some sort of a positive outlook that the company is probably seen in announcing this attempt at a JV. It could be anybody. It could be ThyssenKrupp. It could be some large names from Europe. But that could assure them of a market, that could assure them of cost control and synergistic benefits as well.
Okay, Prakash, quickly, could there be some kind of an upside for the stock on Monday?
Not necessarily on Monday, Kritika. As I said, there could be a little bit of a disappointment.
Okay.
But
so there could be an immediate fall, perhaps, on Monday.
There could exactly. There could be a little bit of a disappointment-based, sentimental, pressure on the stock. But that would be a buying opportunity for the serious long-term investors who believe that the company will come up with something better.
All right. So just to reiterate to our viewers, Tata Steel has now shelved the plans of selling their entire UK business. However, they will sell 2 of their plants in UK, and they will sign a joint venture, or they're in conversation to sign a joint venture with ThyssenKrupp for their entire European business. So not cancelling the entire sale. However, yes, cancelling a significant portion of that sale, and Port Talbot will remain with Tata Steel. Important clarity coming in, and of course, we will chase this right here on CNBC TV 18 as we have been doing from day one. But for now, let's end this special breaking news edition. Thanks for watching.